Hey everyone, welcome back to Corporate Decoder, the place where we take massive piles of corporate jargon and turn them into something you can actually understand. Today, we're unpacking Cavco Industries and their latest report, detailing a pretty big move they're making in the market. So what's the big story here? Cavco Industries is buying American Homestar. This isn't just a small acquisition, this looks like a significant expansion for Cavco. Let's dive into the details of this deal. Essentially, Cavco's subsidiary, Cavco Merger Sub, is going to merge with and into American Homestar. So American Homestar will continue, but as a wholly owned part of Cavco. This has been unanimously approved by Cavco's board, so they're all in on this. Now, for the money part, the base price for American Homestar is a cool $190 million in cash. This isn't a small amount of money. It signals a serious commitment to growing their footprint. What does this mean for American Homestar's common stock? Will be converted into a portion of that $90 million payout. Pretty straightforward there. However, like most of these deals, the final price can change a bit based on things like the amount of debt American Homestar has and its working capital. It's like agreeing on a price for a house, but then having to adjust it based on closing costs and any repairs needed before you move in. They've also got what's called a representations and warranties insurance policy, which is a bit like an insurance policy for Cavco, in case American Homestar didn't tell them the whole truth about its business. This merger has to happen by October 31st of this year. Otherwise, either side can walk away. There are a bunch of conditions too, like American Homestar's shareholders have to approve the deal, which is expected given the price, and they need to get the all clear from antitrust regulators. These are the government checks to make sure one company doesn't get too big and powerful and stifle competition. And here's a bit of a kicker: if American Homestar backs out of the deal to go with another buyer, they might have to pay Cavco a breakup fee of $6 million. That's a pretty hefty penalty, and it shows that Cavco really wants this deal done. They're aiming to close this deal in the third quarter of their fiscal year 2026. So not immediately, but in the not too distant future. This also means that the terms described here might change slightly before the final closing. To go along with this announcement, Cavco also put out a press release on the same day, July 14th. They're even hosting a conference call to discuss this acquisition, so investors and interested parties can get more details directly from management. This is pretty standard practice when a company makes a big announcement like this, shows they're being transparent about their strategic moves. Now, every SEC filing has what's called a cautionary note about forward-looking statements. This is basically a disclaimer saying that while they're optimistic about the future and this deal, things might not turn out exactly as planned. Many factors outside of their control could actually change the outcome. Cavco is basically saying, hey, we hope this works out great, but there are always risks involved, and we can't promise the future will be exactly like we're describing it. And importantly, they don't plan to update these future predictions if things change. They're only stating their expectations as of right now. The full details, the nitty-gritty, if you will, of this acquisition agreement are filed as an exhibit to this report. It's like the full legal contract that backs up everything they've announced. They've also removed some of the detailed schedules and exhibits from public view, but they've said if the SEC wants them, they'll provide them. This is common practice to avoid sharing commercially sensitive information, but it means the full picture is only available to regulators, and the report is signed off by Seth Schutnecht, who holds a pretty significant title: Executive Vice President, General Counsel, Chief Compliance Officer, and Corporate Secretary. That's a mouthful, but it essentially means he's one of the top legal minds at Cavco, making sure everything is by the book, so this deal has legal backing from a high level within the company. Overall, Cavco Industries is making a bold move by acquiring American Homestar for the $190 million. This is a significant cash outlay that shows their ambition to grow their business market presence and likely their product offerings. It really signals a strategic shift towards expansion and consolidating their position in the industry. The success of this deal will depend on those closing conditions being met and how well American Homestar integrates into Cavco's operations. Now, looking at this from a strategic standpoint, Cavco is clearly not content with maintaining the status quo. They're actively seeking growth through acquisition, which can be a smart move to quickly gain market share, customers, and potentially new technologies or efficiencies. However, acquisitions also come with their own set of risks. Integration challenges, culture clashes, and overpaying for a target are all real possibilities. They've got a deadline in October to get this done and a $190 million price tag, so the stakes are high. What we're not seeing in this particular filing are the detailed financial statements of American Homestar. Instead, this is a report about the agreement to acquire them. We'd have to look at separate filings or the press release to get a sense of American Homestar's financial health. As a general principle, when a company spends $190 million cash, it's crucial to understand the financial performance of the acquired company and how it will impact the acquirer's balance sheet and future earnings. Will American Homestar be a cash-flowing asset that boosts Cavco's bottom line, or will it be a drag on their resources? In terms of risks, Cavco cites regulatory approvals as a key factor, and that's definitely a big one for any acquisition, especially when you're talking about companies that might have overlapping markets. They also mention the risk of the deal not being completed in a timely manner or at all, which is always a possibility with large transactions. And while they've secured insurance for breaches of representation, they're also exposed to general business risks that could impact either company after the merger. My take on this is that Cavco is playing an aggressive growth game. They're betting big on American Homestar to be a valuable addition to their portfolio. If they can integrate it smoothly and if American Homestar performs as expected, this could significantly boost Cavco's revenue and market share. The key, however, is execution and due diligence. Those representations and warranties are there for a reason, and that $19 million needs to be a well-spent investment fine. Alright, that's our breakdown of Cavco Industries' latest filing. What do you think about this major acquisition? Are they making the right move by spending so much cash? Let us know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more dives into the world of corporate finance. We also have a growing Discord community where we discuss these filings in real time. Link is in the description. Thanks for watching, and we'll see you in the next one.